Welcome back, everybody, to the Steve Malzberg Show. I'm Amy Holmes, filling in for Steve, who's celebrating the Jewish holiday of Rosh Hashanah. And right now, I have the pleasure of being joined by Scott Carter. He's the CEO of Lear Capital. Thank you so much for joining us, Scott. We appreciate it.
Thanks for having me. How you doing, Amy?
I'm doing great. Good. So first question, right out of the box. Let's talk about quantitative easing. You're a finance guy. You know all about this kind of stuff. Do you expect that we are going to see inflation ever start to rise with the Fed's policy of quantitative easing?
Well, I think we have inflation now. How they measure it is unique, but with quantitative easing, it does bode the question, you know, is there any inflation, real inflation? The fact that they don't count energy and they don't count food keeps a lid on inflation, but you and I know that if you've got kids in college or healthcare or rent, inflation's actually pretty high for the average bear out there.
Right, interesting stuff. So the Fed is meeting tomorrow for 2 days, and you know, investors and forecasters are waiting to see if the Fed is finally going to raise interest rates for the first time in 9 years. But if interest rates go up, often typically that means bad things for gold prices. So what do you tell gold investors about what to look for over the next 2 days and moving forward?
Right. Well, I think gold is a long-term investment. So what the Fed does tomorrow or even a quarter from now really doesn't impact whether you should be diversified in your portfolio. I think the Fed has painted itself into a corner. They have a slow-growing economy. They have put a lot of quantitative easing in place, and if they start raising rates, then the stock market's going to decline and consumers are going to pull back. So I think that if we get any rate increase at all, it's going to be a token 25 basis point rate increase, and that'll be it, because we are still in a tough economy. The world's in a tough economy. It's slowing down in China, in Europe, everywhere.
Right.
And that's a problem for the Fed. So I think we're more likely to see more quantitative easing instead of more interest rate hikes.
Got it. So you mentioned about the world economy being in a tough place. China in particular, we're seeing a lot of news reports about the Chinese economy slowing down and possibly even at a rate lower than during the banking crisis. Scott, what does this mean for American consumers, for the average American like you and me going to the store, buying products possibly even imported from China?
Well, China's an export economy, and we buy a lot of products made from China. Remember, though, China's economy slowing down is still a 7% growth rate. We're at 2.5% growth rate. So that's a $10 trillion economy growing at 7.5%. We could only dream of even having a 3.5% and 4%.
Isn't Jeb Bush promising 4%?
He is. I think that's going to be tough to get, to be honest with you. But China's slowdown is not good for the world economy. They have been the lead engine here for a while. Even though the U.S. economy is the largest, China generates a lot of growth, and we have multinational companies that sell into China. So their slowdown will impact the U.S. economy and the world economy. So the fact that they are maturing as an economy does make sense, but that makes it tougher for other countries, and it makes it tougher for central banks to keep this ball going forward. Without growth, it's tough to support the debt, and I think therein lies our problem, Amy.
Right, very interesting. I was reading that the Chinese government has said that they might open up investments into state-run businesses to private investors to try to spur and pump Chinese growth, but I looked at that and I thought, this could be a repeat of Russia and the oligarchs, and those people who are politically connected get the inside track and, yes, become very, very rich, but the working class and the middle class get completely bypassed. What do you think about that?
Well, I think it's a great point, and I think that as tough as the U.S. right now is, it's still the best market and the best opportunity for the average person to get ahead in the world. In China, they keep a lid on things just like Russia did at one time. So, you know, they do their economics and their policies the way they do it, and we do it the way we are. I think that we've got the best model, even though the model looks like it's a little tattered right now, and we've got to be prudent as investors. Doesn't mean the model's broken. You just have to be wise as you invest, because economies go up and they go down, and your stocks and your bonds and all that. So be a prudent investor, be diversified, and stick with the United States. It's a great place.
Thanks so much, Scott. We appreciate you joining us tonight. It was such a pleasure speaking with you. And to learn more about gold investment, go to learcapital.com. That's learcapital.com. And this is the last segment of the day, and I want to say how much I've enjoyed hosting the Steve Malzberg Show these past couple of days, and thank you for tuning in to watch. Steve will be right back for you tomorrow. Stay tuned for Steve's Give Me 5, but first, This Wednesday night, immediately following the CNN debate, Newsmax is hosting a post-debate special featuring Ed Berliner, J.D. Hayworth, and Steve Malzberg. We'll bring you all the highlights from the debate with full analysis from our expert panel of Dick Morris and John Zogby. We'll also be joined by special guests Dr. Ben Carson and Michael Reagan live from the debate, so make sure you tune in Wednesday night at 10 p.m. Eastern only on Newsmax TV. And immediately following the debate, Newsmax will be conducting an instant poll, and we want you, Newsmax viewers, to weigh in, judge who you feel the winner was. All you need to do is sign up right now at newsmax.com/judge. This will enter you as a debate judge, and results will be shared live on our broadcast. Sign up right now at newsmax.com/judge.